And we're live. Hello, everyone. Hello to another ITSA panel discussion on the topic of. We're live. Just a second. Hello, to disable my second sound. So we'll be talking today about sidechains. Hello, everyone. Hello to another ITSA
Can you folks
panel.
Disable your microphone?
Just a second. Hello, everyone. Disable my second sound.
Yeah.
So we'll be talking today about sidechains.
Let me see. Okay.
You
just need to disable some kind of sounds that are playing in the background. And we're here. Yeah, perfect. The live stream is on. Everything works perfect. So welcome everyone, welcome to the audience, and we are back with another discussion on the topic of multi-chain futures, sidechains, L2s, and the Ethereum merge. Let me do some housekeeping to explain what's going on, and we'll start with the introduction of our speakers. So my name is Valentin, and I am Executive Director at the ITSA, and we develop token standards for the global token markets. If you want to learn more about ITSA, please visit our website and read about our activities. We do these discussions every month, so if you're interested in these topics of blockchain, join us, follow us on YouTube, and or maybe on social media, so you don't miss any events. So today we'll be talking about scalability, interoperability, multi-chain future, and I would like to start with an introduction of our guests. And Zagar, why don't you start and introduce yourself?
Sure. Thanks, Valentin, for invitation, and good to be here. Myself, Sagar Barwalia. So I'm part of BlockRocket core team. We are early stage startup investor for Web3 native startups. We do mostly pre-seed and seed stage investment. We heavily focus on founder. On top of that, we are very thesis-driven venture arm who focus on deep tech infra side. On top of that, blockchain use case side, we heavily focus on it, and also we back like some of the successful startup in past. You can check out on our website blockrocket.io, and yeah, happy to share some of the knowledge what I have gained in last 5 to 6 years from the industry, and yeah, good to be part of this panel event and looking forward to it.
Thank you, Zagar. And Freddie?
Yeah, sure. Hi, everyone. My name is Freddie. I'm the Ethereum ecosystem lead at Blockdaemon. Blockdaemon is an institutional infrastructure provider on over 50 different blockchains. So we have them all, but I have the privilege to focus only on the Ethereum ecosystem and everything that surrounds it with layer 2s, EVMs, and things we talk about today. And yeah, what we offer to our mostly institutional customers is staking, nodes, infrastructure, and also data with our Ubiquity API. So, and everything multi-chain across a lot of different protocols. And happy to be here. Thanks for having us.
Thank you, Freddie. And Luke?
Hi, everyone. I'm Head of Innovation at Quant Network, and we provide interoperability solutions between different DLTs, DLT networks, and blockchains. I've been in the blockchain space since about 2017, working at universities and quant, and previous approximately 7 years to that, I was also in university working at the domain of multi-agent systems, and a blockchain network has multiple different multi-agent systems operating over it. That's me.
Thanks, Luke. And Gerber?
Okay, hello, I'm Gerbert. I am COO and co-founder at Funly. And at Funly, we are actually a technology provider. We make it easy for developers to create user-friendly blockchain applications. And for that, we offer blockchain wallets, NFT management solutions, and an NFT marketplace that are usable by any user without crypto knowledge.
Thank you, Gerbert. And folks, if you have questions, please post them on the YouTube question section, and we'll ask our panelists at the end of the discussion today. So I would like to start with the introduction to the problem with you guys. Like Ethereum has been dominating the blockchain space, the crypto smart contract space for the past few years. But we see, because of high transaction fees and full blocks, people have started like moving to other infrastructure providers. Some call them sidechains, others call them L2s. So could you like give us a brief introduction on what are these solutions, what are L2s, what are there any alternatives to what I've already mentioned? And if you give an example, that would be great. Maybe start with Gerbert.
Okay, so I think we have a lot of new layer ones that popped up the last coming years. They are direct competitors then for Ethereum. Then we also have the sidechains like Polygon, for example. So they basically work on top of the Ethereum ecosystem, and they kind of sync with Ethereum. They provide bridges to move your assets from Ethereum to Polygon. And then you also have the layer 2s who always send their transactions as well, sync the transactions to the main chain, for example. Immutable is an example of a layer 2 solution.
And you folks, if you have anything to add, feel free.
Sure, I would go ahead. As mentioned, Gerbert, I would like to add on top this. So basically, the L1 and then the L2 concept comes because there's like a chain, which is like, you can say like a Ethereum. Then the gas price going up. There are lots of transactions. So let's talk. Let me explain you in more simple terms. So basically, why do we need the L2 when there's already L1, right? So basically, it's more about transaction like congestion. If you're living in New York, then you're like the land is limited. So what you do, you can go vertical. So this is the same thing in Ethereum blockchain or any other. So basically, we are talking about let's focus on Ethereum blockchain. So the transaction what Ethereum chain can handle, which is also limited, and also on top of that, the gas price goes higher because there are some of the traders who want to front run their transaction. So on that sense, what we can do is like we can go on vertical. So vertical means which is like L2. So L2s can little bit help out the Ethereum on-chain transaction on L2 transaction, which is like also cheaper and also efficient, and which can also help like lower the congestion on the Ethereum main chain. But there are also some pros and cons which we can discuss later on about the L2s. There's also like sidechains are also the part of the EVM based chains, but there are also like security and consensus mechanism is also different. Though it runs on the Ethereum network, but they can define their own rules. But yeah, I would like to also hear some thoughts from Freddie and Luke as well.
I can maybe add a bit more. I might slightly repeat certain things though. So layer 1, layer 2 sidechains, they're all different. Well, they're all distributed ledgers. So a ledger is, you can think of it as a database that assigns assets to users. Some of these distributed ledgers are organized in a blockchain manner and some not. What defines a layer 2? Some people will say that a layer 2 distributed ledger borrows security from a layer 1. Well, maybe the main thing from a user perspective is that if your layer 2 goes down, if it crashes, you can withdraw the assets from the layer 2 with a transaction on its connected layer 1. So I'd just like to highlight, we cover this and a few other things in a Future Learn open access course called Become a Blockchain Developer with Overledger, if you want to learn about the basics of distributed ledger technology.
Right, and in the interest of not, repeating anything that's been said, it's all been great, and I might try to summarize it very high level, what it means for the end user, because that might be some of the audience members' biggest interest. So usually, no matter if it's L2 or sidechains, it means lower transaction fees and sometimes also faster transaction finality or inclusion into the blockchain. So that's the main part. But I'd say, as always, important in crypto to think about trade-offs. So there are, some security implications and things like bridges, etc., that we can cover later.
Thanks, folks. I read on Twitter also a nice description of the Ethereum block space. Ethereum is basically selling real estate in the block, and it's limited space in the block. So transactions get higher as many people want to insert transaction in a limited space. So I have a follow-up question for Zagar. Since you've been in the VC space, business space for a number of years, and I just wanted to get your perspective or some insights on where the money flows. Like when you talk to people, what are they more interested in? Like some kind of Ethereum rollups, sidechain products, or maybe product like Polygon or Avalanche. Where's the money flowing? Do you see users going towards specific technology? Have you any insights on that?
Sure. I mean, we have to understand the money flow always where the investors look some sort of like potential to double down their money, right? I mean, basically the VCs are also like a pool of funds. They gather the fund from HNIs and from their LPs, and they are looking for the next opportunity. So, I mean, I would like to take you back a little bit in 2017 in the ICO era, where like all the money was flowing into Ethereum ICO time, right? And then like lately, like there was like a DeFi buzz, and then NFT came. So I would sum it up in very shortly, which is like where the money flows, where the opportunity lies, right? So everyone was looking into Ethereum in 2017. Now we have like a couple of other L1s coming out, like Solana and other. There's also L2, which is like Polygon, Arbitrum, and Optimism is quite doing well. On top of that, we have sidechains like Avalanche and Phantoms and all. But I think you have to understand on the perspective of I would always like to go back to realistic side, where doesn't matter people like or doesn't like the New York or London or Munich, but the asset price going up. So basically, those who are looking for more security and more tier one projects, they always go to the Ethereum and Ethereum based projects. Even if till today, like some of the tier one NFTs and tier one projects, they are launching on Ethereum. And if they're if they're already product market fit or they have like some sort of right vision, they always like to go on Ethereum. And then later stage, they integrate a couple of other chains for aiming for like also like a tier 2 category, their customer who cannot pay the higher gas fees, and they can buy like cheaper price assets from other chains. But as a VC, I would say like it's not all anymore about like layer 1 and layer 2. It's also about like infrastructure side. If you look at the investment, it's like almost 100 billion plus pour into like crypto industry in last 2 or 3 years. And if you look at the data this year, it was like 14 to 16 billion dollar per quarter, like Q1 and Q2 poured into the crypto startups. They're like unlimited amount of like startup founders are joining from Web 2 to Web 3, and they're building new projects. So last quarter specifically, I think DeFi was like a king to attract the VC funding in 2021. And 2022 first quarter was like NFT, but like last quarter it's attracted by Web3 startups. So basically, like all the founders like Animoca, A116Z, Zamp Crypto, and other like GSR, they are all looking into Web3 side assets. Also like CeFi side, they are also heavily looking into it. And there also plays some vital roles, which is like regulation and uncertainty. But I would say like Ethereum is going to stay here on long term, and but I'm also like optimistic about like the future will be multi-chain. So it could be like also other chains which will also dominate the industry. But at the moment, which I cannot see the clear winner as compared to the Ethereum. So the money was, yeah. Right.
Go ahead. I was just going to add that I think, like you said, there's no clear winner yet. It's very early days, much like back in a few years back when it was early days for Ethereum and the other layer ones, and it was sort of unclear on who is going to be a dominant player. And I think Ethereum is still standing strong, and I think it's vital to embrace the heterogeneousness of the space, and with layer 2 sidechains doesn't matter. I see them as a great breeding ground for innovation, and there's mutual benefit from layer 1s, layer 2s, and otherwise, because on layer 2s it's sometimes easier to innovate rather than on such a big network like Ethereum is. So we see a lot of stuff, particularly with regards to, for example, the recent discussions about MEV or OFAC compliance and ordering transactions and stuff. And I think all these layer 2s have different ways of going about that problem. And that's great, because in the end, I mean, there might be theoretical solutions, but you really have to find out what works in practice with all the people, the users, and the developers, etc. So really, trying an experiment in as many ways possible, I think, is beneficial for the crypto space as a whole.
Yeah, 100%. For example, if you're launching some gaming side projects, right? I think the launching on Ethereum would be like catastrophe. Then you need like L2, which is like cheaper in terms of gas transaction. But for example, like Moonbird or Bored Apps, and these are all sort of NFTs. They launch on like Ethereum main chain. So yes, Ethereum is still like the mother of innovation, I would say. And
yeah,
to come.
I guess it depends pretty much on the product. Like generative art NFTs, like you mentioned, Bored Apes, for example, for them, it makes sense to go on Ethereum because it are very expensive NFTs usually. While for games with a lot of cheaper NFTs that need a higher throughput, it doesn't make sense at the moment to just go on Ethereum because they are not able to handle it. So for them, these other alternative L2s and sidechains are much more interesting.
Okay, that's interesting insights, and I have a follow-up question for Luke regarding scalability, because if I'm a user on a public blockchain space on Ethereum, I use, for example, MetaMask, and I need to switch between infrastructures, layer 2s. I need to add them to the MetaMask interface, and I was wondering, like, does it look the same in the corporate world where everything is so messy in terms of how you use different infrastructure, or is this much simpler for you guys at Quant, or is it a different approach to the problem?
In the corporate space, scalability of transactions, it's not really the problem. So one of the reasons you might actually choose permission blockchain is so you can get quite high throughput, because the reason you don't get high throughput on the public chains is in the proof of work space, anyone can create a new block at any time, and this slows everything down. The problems that we see in the corporate space is, of course, connecting different DLT networks together. This will always be the case. There's always going to be at least a few different technologies around. And companies come to us and say, we have this blockchain on Fabric or something, but we want to put some tokens on Ethereum, and how do we do it? That type of questions. And occasionally we see problems around privacy, how to build private solutions in the permission blockchain itself, or as you bridge over to the public space. But yeah, scalability, I say, is more of just a public space problem, pretty much.
Yeah, and you talk a lot about interoperability in the corporate world, because you have not only blockchain to connect to, but also databases from like company information, right?
Yeah, so they want to connect to legacy databases as well, but usually corporate clients are more familiar with that problem. In general, corporate clients will know one DLT technology quite well, but they'll be unfamiliar with other ones, and sometimes some clients will be unfamiliar with everything, which is why we built Overledger's solution as what we call a DLT gateway. I can briefly cover this, maybe. So when you connect an application to blockchains, you have basically three infrastructure choices. You can either connect your app directly to a node, or nodes, but that's not very scalable. So then you might go to the second infrastructure possibility, which is like a proxy, where you put like an API in front of many nodes, and this proxy will just forward requests and respond with this request in exactly the same style as a DLT node would. But a few years ago, we decided to pursue this DLT gateway model, is where we still have an API, we call it Overledger, and we connect to many blockchains underneath, but we perform the data translation from each blockchain to each other. We present a generic data model to users and a generic interaction model. And, for some people, they like that a lot, especially for people who don't have familiarity with any blockchains or just one blockchain.
Okay,
right?
that's yeah.
Maybe I can add to it. So I see, like Luke described, two different things of interoperability. Number one is blockchain with traditional infrastructure. And we see that as well on our institutional client side. Like they need to do token accounting, let's say, right? And they have some sort of accounting system, and this is a pain point, ever since crypto got invented, basically. And I know it from my personal finances and tax reporting as well. So it's super hard to get the actionable data out of the blockchain. And so, for example, for our staking customers, we built the staking API. Now we also have a dashboard, which is great to show, and in the sales process, it's important, and for the business people to check it. That's great, but the real value comes from the API to automatically connect into your existing systems, because it's not a greenfield approach for most traditional enterprises, at least. I mean, crypto natives might be different, but all the others have to, in some way or shape or form, integrate with existing systems. So there's the interoperability or connectivity or interface issues on the Web 2 to traditional IT side. But then there's also the interoperability side within the blockchain space. So whether that's L2 to L1, whether that's bridges between different L1s. Generally, we see the trend to more modular blockchain designs. Talk about data availability layers like Celestia and others. Where the full stack that we used to have, a core layer 1, is now broken down into different parts. I mean, the most obvious example maybe today with the merge is the merging of the execution layer of Ethereum with the consensus layer of the beacon chain. So those are two layers that are now combined into one, but they're basically two different clients that operate on them. And then if you put data availability or proto-dunk sharding or other scalability solutions, that would become more modularized with specialized components, which is great because it moves us ahead in terms of scalability and security maybe and other aspects. But it also makes to operate all that infrastructure a lot more complicated, which in turn is obviously a business opportunity for tech providers like the panelists are here, basically. But I think this is a way, I'm not a historian, but I would say that all technology developments go along that route. So they start in a very massive innovation or something, and then this gets broken down into different pieces, and there's competition and innovation on all those different layers, and then the stack matures and gets more resilient, but also, I guess, harder to comprehend as a whole.
I mean, if we look at the whole population of the world, I think 5% of people are using the crypto. And if we just look at the 95 who are not crypto native people, I think they would not really care like which chain would be used in the future, right? We care more about like use cases and how it can make our life easier. I mean, if I give the example of BlackBerry, like back in days, the people were saying like asset manager and big guys will never move away from BlackBerry to the iPhone. And now we can see after 20 years, like, I think BlackBerry is not even around at the moment. So, or maybe sort of like maybe 1% of market share they own. So I think we are very early. And the crypto side, crypto native people, we can always discuss because we understand the tech and go more in detail. Sort of, right? I'm not a developer, but let's like my day start with the blockchain and ends with the blockchain. So basically we're working blockchain industry, so we can go more detail on the tech side or like use cases side. But the normal people on the streets, on the outer world who are not crypto native guys, they honestly don't care. So if I would like to drive a BMW car, I would literally not care like which kind of ECUs they are working on, as long as the BMW gives me like security, fast pay, right? And my better user compatibility, I would be down for it. So something like mass, when we want to talk about like mass people thinking on the blockchain side, they would literally not care what's happening in the back side and the back end, like which chain they are using. All about it's like giving them the right product, which is like easy to use and make their life easier.
Thanks, Zagar. Let's like touch on wallets for a little, Gerbert. Like we've been talking about sidechains, L2s, and from like, let's take for example a gaming solution, a game on a blockchain. Like you need like cheap transactions, fast transactions for gaming, of course. So how Venly fix their infrastructure? Is it based on scalability, or is it based on what the user demands? If the user demands to be on Ethereum, you provide the Ethereum solution, even though it's very expensive for them to play that game on Ethereum, for example.
Well, we integrate multiple blockchains that are all integratable to unified APIs and SDKs. So whatever blockchain they want to choose beneath, the way they integrate the blockchain through Venly is the same. How we pick our blockchains that we integrate, it mainly depends on the due diligence that we do. So we check out the technology and also the team, because we want to make sure that if a game studio develops a game on top of a blockchain, that it runs smooth, that if people get an NFT dropped in the game, that they don't have to wait for minutes before the NFT shows up in their inventory. And it has a chain that if the market goes down and there's a crypto crash and the chain crashes as well, that's not a chain that we can offer to our developers. So we first do this due diligence of the chain, of the technology behind it, and also of the team, because we want to guarantee the game studios that integrate the chain, that it will be still available in the coming years and not just die off. And then we also demand a partnership with their tech team. So if things would go down, that we have a way to escalate it to the blockchain team.
Interesting insights. I wanted to also add on the decentralized app perspective. We know, like, for example, Uniswap lives on Ethereum and also lives on Avalanche, or on some kind of rollup on Arbitrum. These apps like live on, they're like distributed among blockchains, but they're not connected directly. And I read about QuantLook that Quant provides a multi-chain dApp solution for such problems. Can you expand on that? Because it sounds very interesting how you approach a problem.
Yeah. So this is there's a few different ways we can do this. I mean, one of them, which we're looking at, patent pending, is to create sort of a roll-up that's attached to many different blockchains at the same time. So you can add transactions for this roll-up on the cheapest blockchain or the quickest one that you want at the moment. Yeah, because with roll-ups, at least how it was a couple of years ago, people were just creating roll-ups for this blockchain, roll-up for that blockchain, and not thinking about what happens if we step back and allow these transactions for data availability of your roll-up to be distributed around. But to do that, you need to know how to order correctly transactions between blockchains and how to replay the transactions if required. Yeah, and of course, apart from that type of thing, we provide dApps that use all the three main types of interoperability, asset transfer, data transfer, and data exchange in the fairly normal way.
Okay, that sounds interesting.
I think this is going to be a huge design space, particularly if you talk about Uniswap as the main DEX all around, and if there's better ways to connect the liquidity of the different pools on the different networks, obviously that would be a great benefit to all parties involved, I'd say, and would also maybe limit some of the arbitrage going on, which is then maybe externalizes MEV or something like that. So I think we'll see a great deal of innovation around that, particularly with the DEXs as probably the first users, because the benefits are huge and sort of low-hanging fruit, relatively low-hanging, I'd say.
Okay, thanks, Freddie. Before we move to the merge, because this is also a topic we wanted to discuss, and we already discussed dApps and solutions. Like, we know that Ethereum has specific scaling solutions called rollups. We have optimistic rollups and ZK rollups. How they work, it doesn't really matter for now. But do you guys think that the rollup's gonna win this race of sidechain solutions? Like, do we have a L2 rollup centric future on Ethereum, or maybe Polygon is much more easier to integrate. People will move to other chains, other L1s. Like for example, a reason might be more secure bridging between Ethereum and an optimistic rollup like Arbitrum instead of between Ethereum and Polygon. Or we also saw the emergence of specific dApps that are running on their own rollup. This was a, if you know DYDX, DYDX is a decentralized exchange. A few months ago, they wanted to create a specific rollup only for the DEX and spin it on top of Ethereum. Now they're moving to Cosmos, but this is maybe a topic for another discussion. But we already see that people can build dApps on rollups on top of Ethereum. Now, why a developer should use Polygon, for example, instead of some rollup which has the underlying security of Ethereum compared to Polygon. And Ethereum has been the longest chain running since 2015, I believe. Do you have any thoughts on that? Or also
I could come in. So yeah, I think there'll always be a space for rollups. The idea that you can withdraw your assets on the layer one if the rollup fails is very nice security functionality. Where they are in the stack might change though, because at the moment we see like the building of quite a few different ecosystems around certain technologies. Where there'll be multiple chains in the same ecosystem. So this is sort of Polkadot as it is now, Avalanche as it is now, Ethereum as it will be after the Surge event, which is after the merge, and you could argue Cosmos as well. So in this setup, you have like a main chain, and then you have other chains that are connected into the main chain, and the nodes of the main chain understand that the, let's say, subchains are there. At the moment, with rollups, like on Ethereum nodes are not aware of rollup chains being there, and you could argue maybe that makes the ecosystem a bit more fragmented. So it's possible as we see these ecosystems develop and become more enriched, rollups might even move down a layer. We might, in a couple of years, maybe we say layer 3 is where rollups are. Let's see.
They might have a different name in the future. Also, we might call them only L2s, for example.
I mean, if I say from the VC perspective, like if you talk with any tier 1, tier 2 VCs, they're all heavily looking into like ZK rollups. They're all bullish on ZK rollups. So again, like coming back to my first answer at the beginning of this panel event is like, investors always cashing out for their own gains, right? So where the opportunity goes, where the mass is going to look at. Coming back to ZK rollup question. So ZK rollup is like, we have to understand what is ZK rollup. Maybe some of the viewers might not know what is ZK rollup, because we all of are like crypto native people who understand like what is ZK rollup. But for the audience, maybe ZK rollup is like, so you try to pass the transaction on the Ethereum one by one, right? So ZK rollup is like kind of bundles. So they bundles the transaction into one batch, and then they provide the like summary of the transaction, what is the changes they want to do it on the blockchain. And then after that summary, which also they need to validate. So they have like a ZK rollup as the validity proof. And that validity proof will be executed by the cryptographic process, right? And then you transact like all the transaction all together in the bundle. And coming back to dApp's question, I think if you look at the moment, so Polygon and Arbitrum, Optimism is like, they have like, I mean, if you, as a founder of dApps, if you want to look for like where the mass is, like where the users are, so you always look at the chains, right? Where the liquidity is there, where the most of the people would like to interact on that particular side chain or main chain. And if you look at the current scenario, I think the Polygon have like a massive user base. So if as a founders, you would not go with like some new chains which have like less liquidity and less users, but you go always where you can find your user base, right? So basically, if you want to raise the fund, you will always go where the most the VCs hang out, not like some other part where you cannot find the investor. So this also applies everywhere. This is the same logic where if you're launching the dApps, you always look after where the most of the majority people are using the chain. But also it's again, like this is like a short time frame. If we look at the macro level, like I think things can be changed. But again, like CK rollup will massively reduce the transaction burdens on-chain data, and they will like execute on the off-chain side. But yeah, I think Freddy can more validate on the more detailed tech side on CK.
Yeah, I think this is a good example again. I think also I share the excitement about the CK technology, which is not quite ready for prime time yet. So I think there's going to be a lot of innovation, and it's super interesting whether like Optimism and Arbitrum as the optimistic rollup fraction basically will, until ZK tech is ready, have such a big market share that they're just that the users are there and people are building on it, and then CK technology or CK rollups will have a much harder stance to penetrate that market. I would even argue that Ethereum might not be the best blockchain tech, but it was the the first smart contract based chain. So that's a huge advantage, and we can never underestimate the network effects. And maybe not the most high-tech chain or idea will win the game, but really, like Sagar said, where the users are, or I would even argue where the developers are, because if there's a lot of development, then users would generally follow that. And I think this is a big part of Ethereum's success. We as Blockdaemon definitely are excited about the layer 2 future, and we're going to be adding all of those Optimism, Arbitrum, Avalanche, Polygon to our Ubiquity API. So it's again a multi-chain data API. So we're not picking winners, but every solid contender has a place in our hearts and gets the chance, so that the institutions can also connect to those different chains.
I have a follow-up question. From user experience, optimistic rollups have lower transaction fees, and ZK rollups have higher transaction fees. Do you think this is gonna change with the tech, that like transaction fees will be the same in the future? Because this is, I think, also the reason why users prefer optimistic rollups like Arbitrum. What do you think about that?
That's a difficult question, I think. But really, I think to me, the user experience depends on various factors, and not only transaction costs and transaction speed would be the second one, but also how easy it is to bridge to those things, get the assets on those, how easy or how well integrated it is. Let's say if user is using MetaMask, is it easier on one chain than another to add it, because that's a great frustration point for me always to find the data to put into MetaMask, and these kind of things. So like tooling, developer tooling also, and not just user tooling. So there's a multitude of factors, the most obvious being transaction costs, but I don't think this is by far the only one.
But I think also not everyone is looking for cheaper things, right? I mean, I would like to again give the example of Android and iPhone. So Android phone costs like almost 1 or 1.5x cheaper than the iPhone, but still people would like to go with like iPhone. Same story again, as we are in Germany, most of us, or in Europe, even though the rent prices are higher in the many big cities, but still we are living there. So it's also about like what you're looking for, right? So what kind of like use cases you're looking for, what is your goal? So with the ZK rollups and optimistic, both the rollup side, it's also like most of the time the infrastructure layer tooling, mainstream adoption, also like developers where they are heading on top of that, what value proposition they get it, right? So sometime even living in village, it costs you like half amount of housing rent, but still if you are like a builder, or if you are like wants to get exposed to the city life, then you will be miss out, right? So that's again like it depends on different aspects. Yes, the one thing is like the Arbitrum, the transaction fees is higher than the Polygon, but you can look at the also transaction values are which is like 2 to 3 times more on Polygon than the Arbitrum side. Though like Polygon have their own network consensus, and they also rely on their own Matic, which is you can stake on, then strengthening the network, and then the Arbitrum, which is like completely rely on the Ethereum chain, and also like a transaction withdrawal of the assets also takes a different time than the Polygon withdrawal, and then on the Arbitrum chain. So there are like multiple factors we should consider. But again, going back to the same thesis that It's all depends on like where the mass is moving and what value proposition you can give to the users. So it's all about end users.
Yeah, it's about the solution. I liked your anecdote about real estate. Actually, if you think about it, a city's real estate is like block space. It's limited, and you sell space in a block for people to like bet on real estate. I think this is a nice segue to the next topic, which is the Ethereum merge, which is a huge topic in the crypto space. It's a historical event. Vitalik has been talking about the merge since the Ethereum launch. I wanted to first cover with you guys what is the merge, what is actually happening. And also I wanted to discuss a few points where there might be some misunderstandings, what's going to happen after the merge. Freddie, if you would like to start, give us an intro. What is the merge?
Sure, there's a lot of aspects to it, so I try to touch on a high level on a lot of them, and then we can dive deeper as we go. So the main thing is where Ethereum is moving from proof of work to proof of stake. So instead of the energy intensive mining, it's the capital intensive staking that is securing the blockchain, the Ethereum blockchain. That's sort of the main thing. Now, this has been compared to switching the engine of an airplane in mid-flight because there's supposed to be no downtime. And it's obviously a great engineering feat to do this at a blockchain, second largest blockchain by market cap after Bitcoin, and the sort of most active chain in terms of development and dApps and use cases built on top of it. So they absolutely cannot go anything wrong, basically. Well, it shouldn't be, and I don't expect it to be. So that's sort of the main point. And on top of that, there's obviously several consequences. Number one, the energy consumption goes down by 99.9%, which is great for the environment. It's also great from sort of the ESG, so environmental, social, and governance rules and regulations that institution might face and might have been sort of blocked into invest in crypto assets by that. So this is a benefit, and that we hear from our institutional clients, for example. There's also the practical consequence for stakers that their rewards will effectively double because transaction fees and MEV rewards are being paid to the validators instead of the miners. Also, the protocol issuance is going to go down by 90%, roughly. So because of the issuance that is paid to the mining pools or the miners of the proof of work blockchain cease to exist, and only the existing rewards that have been paid ever since the launch of the Beacon chain 2 years ago will continue to exist. So there's also something about the asset becoming, depending on gas prices, deflationary, or at least the yields are going to be positive particularly if you consider inflation, protocol inflation as well, compared to some other chains. Yeah, those are just a few of those. I touched on another aspect, which obviously for us as an infrastructure company is very important, that the execution layer, which is the former ETH1 chain and nodes and client software, is sort of put together with the consensus layer, which is the ETH2, aka Beacon chain layer, and those two are now combined. So that has some higher requirements on the infrastructure side, and this is what keeps us busy these days, basically, to update all the nodes and combine them in the proper way so that the experience for any customers being on our infrastructure, on our staking, is smooth and there's no disruption at all on that part.
Okay, thank you, Freddie. So it's a little bit of challenging integrating the new the merge on the Blockdaemon stack, I guess.
Well, I mean, we're the pros, so I think we're better prepared than some amateurs or maybe smaller infrastructure providers or something. But yes, indeed, it is more work than a regular hard fork. Let's put it that way, because on a regular hard fork, you only have to update one client software, and that should be it. But here, we also have to look at the underlying server hardware, like is there enough storage space, hard disk space. That's one consideration, because there's going to be a combination of traffic. There's multiple nodes or multiple client softwares to update. Then there's the so-called engine API that connects the two, and they need to be authenticated to make that working together smoothly. So there's more steps involved than on a regular hard fork, and that I think is important for people to realize. And that's why also this has been tested on several test nets and shadow forks, etc., to number one, learn from the technical side and for the client developers to deal with these things, but also for users. And we've participated in all the testnet merges, for example, just to play through the process of how to handle these things.
Yeah, I mean, for the normal people, it's like just take the popcorn and sit back tight, because it will not affect the normal people. And I would like to also clarify one thing, which is like so many guys have sort of like create the hype, like merge. It's a big thing. Yes, indeed, it's a big thing for the crypto industry and for all the Ethereum lovers. But on top of that, it will not change so many things at a bigger scale, right? So if your question, will it reduce the price on transaction? Definitely not. Will it faster the transaction? Definitely not. On top of that, after this merge, people should also not forget that we have to wait for the another like upgrade, which is like Shanghai network, right? Until then, even if you staked your Ethereum on the POS, you will not get that reward. That would be locked on like Beacon chain for another 6 to 12 months. So still a lot more to come. But these all things remind me of back in days of 2017 when Bitcoin forked, right? They had like fork of Bcash, and Roger Ver, another Bitcoin maxi, he chose to go with more business side. Let's fork the Bcash and like add up more like a business side perspective. Time is money. I mean, time is the key. 5 years later, no one talks about Bcash, and still there is like a Bitcoin is like still going stronger. And also, I sort of not agree with also Bitcoin maxis. Sorry, guys, but how can you take the decision like Ethereum merge will not happen and will go on and will go on when you don't want to even have like time to understand what is like smart contracts and all, how it can change the world. So here I'm also agree with that. Bitcoin wouldn't be Bitcoin without Ethereum, because Ethereum done like lots of things for the whole massive infrastructure development. And this thing, I think Bitcoin maxis should just look outside of the box and think about this thing. But yeah, no offense. Myself also like a Bitcoin holder, so I don't want to like start the new fight. But yeah, just be open for the innovation. And last thing regarding the merge, I think again, like massive, like a majority of the people are with the, like a proof of stake consensus, which can also help like reduce the 99% of the energy efficiency, right? So which is also we can make like some environmentalist people or ESG friendly people happy. So they can stop writing some bad articles on energy consumption, so and so. So I think proof of stake is like it's going for good, and the time will tell like which is like will become like successful or not.
Yeah, I've got a couple of thoughts on this merge. I mean, of course, it's great that from an environment perspective, that the transitioning from energy-intensive proof of work to proof of stake. But proof of stake based consensus protocols comes in many flavors, and the particular one that they've chosen has an interesting property, so that should you get your transaction in a block, the worst case transaction finalization time, when the transaction is confirmed and will never change forever, supposedly, is close to 13 minutes. And I just wonder, is that because they've taken so long to upgrade that, you know, the consensus protocol they're chosen isn't 100% market leading in that perspective? But the other thing about the merge, the separation of the execution and the consensus layer, I very much like it from a blockchain perspective. This is an emerging trend in distributed ledger technologies to modularize the DLT technology into different components. But a problem that will emerge when more and more DLTs do this is that people are going to introduce different types of execution layers, and therefore your integration of these different execution layers is going to get more complex. So I think we'll see in the future to integrate new blockchains that do this to be more and more complex than what it is today to integrate one blockchain.
Yeah, Thank you, Luke. I was like also thinking it's maybe challenging also for you guys. You connecting to Ethereum via the API. So when the merge happens, if something goes wrong, it goes wrong on your side too, right? And for clients of yours also.
Yeah, I mean, we can't, we're just bubbling up and translating what comes from the DLT technology underneath. I think Freddie gave a very good overview of how we as infrastructure providers, what we need to do in this type of situation. It is a bit like our bread and butter, but this merge is a more complex upgrade compared to many others in the past.
Yeah. We know that Ethereum has been struggling with a specific problem, which is called the miner extractable value, MEV, where basically people are front running other people when they do transactions on Ethereum, especially when it comes to decentralized finance and trading and you sending transactions, interacting with smart contracts. I was wondering, is the merge changing something in that perspective? Is it like improving the situation of miner extractable value, front running people? Is this a bigger issue? I read that it's a growing issue, especially if you're into finance. You might lose a lot of money there. We have also flash bots on Ethereum. So do you have anything to add to this topic, Freddie?
Yeah, it's another complex topic, and we might have a separate episode on that. I think it'd be worth it. But just on a high level, I think number one, it's important to realize that MEV is not an Ethereum problem, but it's a problem on all blockchains, because you need to bring the transaction into some order inside the block, and then the blocks are obviously chained together. So this is everywhere, and I think it becomes more obvious, or is more talked about on Ethereum, because it is such a highly used blockchain, and because a lot of the innovation, let's say, for example, with flashbots and sort of the so-called democratized MEV or the MEV supply chain that Stefan from Flashbots is talking about all the time, it's more mature than another ecosystem, so it might be less obvious, but I'm very sure and heard numerous people talk about, there's obviously also on Solana and other chains, there's this MEV issue. So that's one. Two, the merge is not going to affect that directly. So because there's still ordering of transactions, it's just not the miners are doing it, but the validators are, creating the block on a fundamental layer. So that's sort of it's just a different person or different entity. But other than that, it doesn't change the problem. Now, what does change is with the flashbots that you mentioned, because they have right now adoption rate of, I think, about 90% of the hash power on the proof of work Ethereum chain. So it's widely adopted, and that's a great success, and I think made all of our blockchain lives a lot easier, because we don't see those gas wars, bots spitting themselves up and making it more expensive and timely for everyone. So that negative externality has been mitigated by the Flashbot software, and now they try to do the same thing on the proof of stake Ethereum side with a software called MEV Boost, which we will enable for our customers to participate in the additional rewards that they can bring. But it's sort of a new piece of software that is currently being rolled out and tested, and the whole supply chain is being basically developing as we speak, and they do have to reach also a meaningful threshold basically to have the same effect on the network. So basically they have been reset from 90% to 0, and now they're working uphill again to adopt that. With that track record, I don't think this is a problem, but it just might require some time to get to the percentages as they were before.
Yeah. Perfect explanation, Freddie. I think we're approaching our end of the discussion, and we have a few questions from the audience. And I would like to start with the questions about the merge, since we're on the topic. There's a question saying many people are familiar with the Ethereum as a blockchain platform and cryptocurrency. What aspects of the merge do you think is most misunderstood, like speed, gas fees, or carbon use? I think we touched on these topics, but we can, yeah.
I think carbon usage is very well promoted, that proof of stake will bring a lot of benefits to that. And well, I think a lot of people expect gas fees to go down, but as I discussed earlier, it won't change gas fees or transaction speed.
Exactly, yeah. Zagar, you wanted to add something?
Yeah, I mean, I already added, so carbon footprint side, as I think Galbat already said. So fees and transition will not affect heavily, as we discussed already. But if anyone would like to say about CO2 footprints, yeah, I didn't do thoroughly research, but of course, I mentioned 99% reduce in electricity, so it's also proportional to the carbon footprint.
Yeah, I think the most misunderstood thing is the transaction fees. Everybody is expecting them to drop, and it's not the case. Luke, you wanted to add something?
Yeah, one of the things I've seen misunderstood is that all these validators have been staking 32 ETH to validate on the Beacon chain and the subsequent main blockchain. And quite a few people might think this is immediately unlocked, that the validators can leave basically straight away, but this will be for a future upgrade. And then even once the upgrade is done, you can only unlock in a very slow, it's like a queue system for the validators to unlock. So the ETH is not going to leave the system immediately.
Yeah, that's also a huge topic to discuss, maybe on a different panel. And the second and last Ethereum question is the merge happening fast enough? Because we see people are not waiting for Ethereum to upgrade, to scale. People are moving to other infrastructure providers like Polygon, Avalanche, Polkadot. So is it fast enough, and is it giving the industry enough time to switch? Interesting one.
Interesting, but mostly historical, because it is happening in 2 weeks, right? So it's really that there can't be anything changed about that. Some people would argue it took them too long because it's basically been in the works for 2 years and announced and postponed several times, which led some maxis of others say it'll never happen. Now it is happening, and I would as it usually is, if the deadline is approaching, work piles up and people are caught off guard maybe that haven't been following the space so closely. But really, if you delay it more, I don't think people would wake up if you postpone it another 3 months. It'd say like, oh, okay, so then I worry about upgrading my nodes in December, and so nothing is gained. So I think it's totally fine. I'm super excited that it's happening now, and as we discussed, a lot of the benefits, which I might add is also there's higher security in POS generally, and also higher decentralization, and paving the roadmap towards sharding and other scalability improvements. So I think this is maybe one of the, not the misconceptions, but the underrated aspects of the merge, because everybody is focusing on the financials sort of. I think the way the proof of stake consensus mechanism is laid out is very future proof, and enables a lot of innovation to happen later on.
Yeah, also one thing I would like to add, which is like a more philosophical, which is like when you are in doubt, don't do anything, that would be the best thing. And I think it will go through it, as far as talking with several devs and also people, but I think Blockdomain is also one of the largest player in the space, and I'm sure if there's high level of work is already going on, so there's no question will it happen or not. It's just a matter of time, and we are almost there, right? 2 weeks. If it's get delayed, it's fine. We can have another date, but I think it's going to go through. That's the thing.
Yeah, let's see if there is a split in the blockchain in 2 weeks. And we have one last question for Quant. It's very complicated, Luke, so I'm gonna ask you if you can answer it, how does your approach avoiding limiting functionality to the least common subset of functionalities offered by the multiplicity of the chains connected to the GW, I don't know what it stands for, to provide seamless network?
I think the question is about if we have a unified API data model, what functionality can you provide across chains? Okay, it is true that we can only provide functionality in some chains that the functionality has to be present on the chain underneath. That is true. So there'll be like a super set of functionality, and not each blockchain will support all of it. But that's just a limitation of the DLTs that we're connecting to.
Okay, thank you. And I think we can add some few last words and say goodbye. And if you want to add something, go ahead and we can wrap up the conversation, folks.
Sure, I would like to share a little bit about ourselves. So guys, if you are like early stage founder building from your garage and looking for funding, feel free to reach out to us. You can also find me on LinkedIn with the same name, Sagar Barwalia, on Twitter, the same name. Or you can just go through our website, blockrocket.io. And we are looking forward to your business plan and talking with you. And as I said, it doesn't matter, you should not be building on Ethereum. We are sector agnostic, market agnostic. So we look for is like a blockchain-based use cases. And yeah, looking forward to talking with you guys.
Yeah, well, maybe I just share blockdemon.com is our website, and we're also multi-chain. If you're in a financial institution in the legacy world, or a DAO treasury or something that wants to, see staking, or you're one of those founders that is going to be funded by Sagar in the future, then you might need our infrastructure or our data APIs. So yeah, come check us out. And if you want to follow me on Twitter, that's _crypto_crack. I'm fairly active there. So yeah, looking forward to connect.
Okay, I can vouch for Sagar and BlockRocket as being part of the BlockRocket family. So if you're looking for an accelerator, they're great to collaborate with. And if you're building a blockchain application and you need some help on tools to easily integrate or make them user-friendly, then come to venly.io.
Okay, yeah, and it's been a very interesting talk. If you want to find out more about Quant, please go to quant.network and contact us. I'll just do one more plug about my educational course. If you want to learn more about distributed ledgers, it is a beginner's guide to become a blockchain developer with Overledger on futurelearn.com. We've had over 2,000 people through the course and using Overledger so far. Thank you very much.
And yeah, thanks a lot, Valentin, for the amazing panel hosting and opportunity.
Thanks, and I will say goodbye to the audience, and we'll be ending the stream. 3, 2, 1, and we are offline, folks.